This week in the parish of bourses and market structure, all-weather excellence as leading exchanges grow more than 20% in Q1. There's a dash of spring MOU madness in the air, while Europe's leading financial industry bodies warn the flywheel needs to turn. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest, episode 244. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the bourse business sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, a frequent complaint in BitCarnage has been the lack of self-awareness of those involved in the crypto v1.0 economy. The metaphoric peak may have been reached during the course of the past week, for I doubt it was self-irony when Patrick Groon, the former FTX Europe head, paid $1.5 million for a gold watch recovered from the Titanic, apparently with funds from the sales of his companies, not from running FTX. The watch once belonged to hapless honeymooner John Jacob Astor IV. Meanwhile, there is a sense of shock about the CZ sentence after all the talk of at least 18 months from various quarters, BitCarnage team included. Coin Tribune discussed the issues in crypto. Why was CZ's sentence so light? Meanwhile, it's time to give up the wheeling and dealing for a while at least. Former Binance CEO Changpeng Zhao says he will remain passive holder of crypto after receiving prison sentence, notes the Daily Huddle. If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day on Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update and happenings in the world of crypto and digital assets market structure, then you can find BitCarnage as a standalone on Substack. This week in exchanges, everybody is worrying about listing power from London to Morocco to Lagos via Nairobi, Dublin, Singapore and beyond. The only patch of optimism outside the USA at all last week was in Azerbaijan, of all places. A raft of MOUs have been signed. Will they impress or conform to Young's Law of MOUs, aka the ultimate deliverable is less valuable than the air miles expended to sign the cooperation? DFM in Dubai and SIX in Switzerland looked to enhance market accessibility, while JSE signed a Tadawul MOU this past week. NSE India was knocked back as it sought to extend market trading hours, and, while this amounts to not even zero shock, it's way more underwhelming than that. According to the Business Standard, NSE investors may face further delays for the NSE initial public offering. Nasdaq were singing their own praises this week as Nasdaq Stockholm and the broader Scandinavian markets remain a tribute to what can be achieved in European equities. That dovetailed neatly with the first logical salvo in the ongoing whataboutery concerning how to kickstart European Union capital markets. The Capital Flywheel European Capital Markets report was produced this week. 37 interviews later, and the European Banking Federation, EFAMA, the fund managers organisation, and FESI of Securities Exchange fame have put together a joint report via the offices of Oliver Wyman. It looks at the issues from a systemic perspective, and it's a smart idea. PLY has for a long time looked at the problem from the issuer perspective and talked about the staircase of capital. As I noted in Big World Above, the consequences of 15 years or more of appalling political laggardship across Europe has resulted in an EU now appreciably poorer than the US, which it once rivalled. Hence, this report seeks to engage the gearing of a flywheel and push the EU capital markets forward, a vital consideration for future economic growth, and let's face it, the EU surviving in the medium term. The report sensibly notes supply side is not the big issue, it's demand that is required, and that immediately has a major piece of friction against it, the core EU precautionary principle. The solution doesn't seem overly complex. Instead of the mad monopoly thesis from the apparatchiks de facto subsidised by Brussels, this paper has a simple set of theses with logical conclusions. The difficulty, of course, is easing the EU out of its dismal anti-innovation corporate socialist protectionism into a brave new digital world of innovation. The key takeaway from this report is the markets are ready. Where on earth are the advocates of capitalism to promote the economic well-being of society to the vastly higher levels of American success? Plaudits to EBF, Afama, Facey and Oliver Wyman on an excellent, though thought-provoking brief, which actually requires a lot less legislation and a lot more elbow grease to make Europe great again. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or if you have time, a positive review will always be welcome, wherever you find this podcast. In results this week, Take a Bow, SIBO, ICE, Nasdaq, NSE and others, amongst them Saudi Tadawul, for being in the 20% plus revenue growth club this quarter. Fabulous results which show dynamic management of markets pays where monopoly milkers atrophy. While Jeff Sprecker's quarterly masterclass discussed AI in detail, the reality is, as these exchange groups exemplify, the human growth thought nexus looks to be pretty strong in the companies that allow, encourage and nourish thinking to happen. Where do you start if you aren't ICE or Nasdaq and want to begin thinking? Exiting the box is a good start, but then again, self-identifying as a lateral thinker, I suppose I would say that. And I think the future of bourses needs a lot more lateral thought, unless we want to be satisfied with single-figure growth like CME, LSEG and others. If you're not already reading Exchange Invest Daily, of course, you need to start there, exchangeinvest.com. It was a busy week for results in the parish. All the details were in Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. Once again, subscribe at exchangeinvest.com and enjoy a free 7-day trial. In deals this week, it was not the busiest of weeks for deals, but all of the information was in Exchange Invest Daily. The LSEG have bought back something around about $1 billion worth of shares. The problem is, the LSEG bought the stock back via their own platforms. Oh no, they bought them over the counter, ladies and gentlemen. What does that tell us about having confidence in the stock market of the London Stock Exchange Group? Meanwhile, the longest running on and off M&A deal in the history of the parish may soon be resolved in favour of the Philippine Stock Exchange, as the Bankers Association of the Philippines announced they're willing to sell their stake in Philippine Dealing Systems Corp, the bond market. If you're trying to get to grips with PSE, PDEX, or indeed the masterclass over AI by Jeff Sprecher in the course of the last week, and much more, you ought to be reading my most recent book, Victory or Death, Blockchain, Cryptocurrency and the FinTech World, to understand how technology is affecting life and markets. Victory or Death is published by DB Books and is distributed by Ingram worldwide. While you're waiting for your copy of Victory or Death to arrive, check out our live stream, Tuesdays 5 o'clock London time, midday New York time. It's the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. This week we had an epic show, actually record live stream of viewers, for our guest Brian Hindman in IPO-VID 142, discussing Blue Ocean and New Market Tide, all about the most exciting ATS in the American market at this juncture. Coming up on Tuesday, we've got Thapelo Tshole talking about Botswana Rising. He's been the man who's been running the stock exchange there for the course of the last 8 years and is actually off to become the head of the Rwandan regulatory agency in the near future. Our finance book of the week this week, which of course you can learn about in advance by reading our free macro newsletter, EI Weekend. You can sign up to that also at exchangeinvest.com. The book of the week from our serial guest on IPO-VID, Rainer Zittelmann, is Unbreakable Spirit, exploring how people with disabilities accomplish the extraordinary in life and set milestones that seem almost impossible even to most people without disabilities. It profiles 20 unique high achievers, and indeed also you can read and listen to more about the book by watching our IPO-VID live stream on the topic, which is also now also a podcast available via Spotify and all the usual sources of excellence for audio information. Product news this week. A very odd headline from the US Senator Rick Scott. Senator Rick Scott leads colleagues in calling out Nasdaq for listing Chinese military company on US exchanges. Frankly, this strikes me as a sort of vote-grubbing charlatanism, which reminds me the political classes remain as mediocre as the ghastly leader vacuum we've had for a generation in the UK and Europe, for instance. Coming from the wondrously international and thriving state of Florida, which is impressive to visit these days, I might have expected more of Senator Scott. Let me turn his thesis on its head. Why doesn't Senator Scott, instead of whinging and promoting negativity of China, instead offer the narrative? Senator Scott, along with Senators Bob Casey, Josh Hawley and Marco Rubio, today offer their congratulations to Nasdaq. US markets are so successful, even the Chinese military is using our markets to fund their operations. As always, caveat emptor is a key factor for investors, and we advise them to consider their investment portfolio appropriately. I wonder, will the good folks of Nasdaq come out swinging? Certainly, the markets don't deserve to be criticised here, particularly given the interventionist approach of regulators who demand to approve prospectuses et al. Also in product news, ICE Benchmark Administration have launched Beta USD software ICE swap rate swap spreads and Eurostir ICE swap rates. Nasdaq plans more short-term options on commodity treasury ETFs. And a bit of a problem for TAIEX in Taiwan. TAIEX futures are facing a US trading ban as they're going to be classified, it seems, as a narrow-based security index. Technology news, outgoing MCX CEO Padalasubi Reddy has noted in an interview with Mint, for MCX, the tech transition to TCS was akin to changing airplane engines at 30,000 feet. Has to be said, I'm not sure blindfolding the pilots before the plane took off was advantageous to the process. In regulation, the FCA's boss in the UK is not convinced private equity poses systemic risk. I hadn't thought it posed a systemic risk either, but now the FCA are saying it too. One feels inclined to re-examine the data just to be sure. Meanwhile, the FCA remain defiant about their name and shame investigation move, despite the fact that the exchanges are obliged not to publish the names of those actually fined for transgressions amongst their intermediary members. That strikes me as utterly bizarre. In career paths this week, IEX, the Flash Boys, got some fascinating news. Brian Harkins, who's got a truly illustrious record across multiple different platforms, is joining IEX as Group President to lead IEX's commercial growth. IEX's co-founder, Ronan Ryan, steps into the role of Group COO, and Florian Cipherer is promoted to Group Chief Strategy Officer. Congratulations to one and all. And finally this week in Career Paths, a fond farewell to Lieve Mostry and welcome officially in situ to new CEO of Euroclear, Valerie Urbain, at the head of Brussels' most systemically important financial bureaucracy. Over in Big World, well, back to that report. FASE, along with EBF and AFAMA, have issued an interesting Oliver Wyman report about the future of EU capital markets. As I mentioned earlier, it's a good read and a pleasant 16 pages make it approachable in a world of bigger, boring verbosity being far too commonplace. Anyway, PLY has made much in recent months of the shocking example of the 15-year plunge of the European Union's economy. The Eurozone and the US were roughly at parity in 2008, $14.2 trillion versus $14.8 trillion on a current prices basis. And the source for that, by the way, is not a neocon or right-wing paper, it's Le Monde in Paris. By 2023, the Eurozone GDP was just over $15 trillion, while US GDP was $26.9 trillion. Remember, fun fact, actually not fun at all, tragic fact, growth over the 15 years from 2008 to 2023 for the EU as a whole, 9%. Growth over the same 15-year period for the USA, 86%. The FASE report notes how US equity market capitalisation has grown from 2016 to 2022 by 48 to 66% of GDP, whereas the US, with far superior economic growth, leapt from 104 to 157% of GDP. Liquidity, measured by turnover velocity, was constant in the US at 145% of GDP, whereas in the EU it actually declined from 68 to 52%, barely little over 1/3 of the US number. US pension, insurance and household assets are 6x US GDP, Even in the largest EU economies, they are barely 2 to 3x in, for example, France, Germany and Spain. There are some bright spots, whereas USA is 622% of GDP as a stock market. In Europe, EU market leaders include Denmark at 654%, even higher than the USA, and Sweden 483%, which of course fall in the epicentre of what I was discussing earlier, the Nasdaq SME Stock Listing Centre of Excellence. In capital market direct investments, the US sit at 288% of GDP compared to 40 to 100% of GDP in EU nations. Indirect allocation is a whopping 525% of US GDP versus 130 to 200% in the major EU nations. The fascinating part is, if the European Union could only match the US, that would mean an additional 35 trillion euros of capital in Germany, Italy and Spain alone. Putting that in perspective, however, the equity market capitalisation of the entire European Union in 2022 was a paltry 13 trillion. And on that mysterious and magnificent note, thank you for listening to this Exchange Invest Weekly Podcast 244. Join us daily via exchangeinvest.com, or if you have a new exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets. This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.